Hello and welcome into the KE Report. Shad and Corey here as your host, and today we are talking with our friend and colleague Sean Brodrick. Sean is the editor of Wealth Megatrends, Supercycle Investor, resource trader, and he is a contributing analyst over at Weiss Ratings Daily. And it's always great to get Sean on the show just to see what's on his radar. We were talking off mic, and it's hard to ignore the last couple of weeks since we've talked in the precious metal sector, the heights that they've reached, and then obviously some corrective moves on Friday and again today on Tuesday as we record this. Exact same kind of playbook in rare earths. Rare earths have been gaining traction. The last couple of weeks, they've been on everybody's mind. They've been selling off, and even other critical minerals like antimony, like tungsten. I've noticed some big moves up in the last couple of weeks and some big moves down. So we'll talk in this one a little bit about these different sectors, but also portfolio management and how you've been playing it, Sean. Let's kick it off with precious metals. What's your playbook been, and what is it currently on precious metals?
Well, we own plenty of precious metals positions, but on October 14th, I told subscribers to both Resource Trader and also Supercycle Investor to take precious metals gains. We have these nice triple digit gains. And so if you just sell half of the position, then pretty much you're just playing with the house's money. And also, you raise cash so that you can then deploy that when you have a big pullback, kind of like the one that may be starting now. And we took all kinds of gains. Some were larger than others, but we took 165% on half of the core mining position. And we took some nice gains on Metalla royalty and streaming, nice gains on Eldorado Gold. Then over in Supercycle Investor, I can't even remember the name of the gold stocks we sold there. But the whole point is that, taking gains is never bad in my book. But if you have really big gains, just like selling half is a smart thing to do, because then you can have cash in hand for when there's a big pullback, and you actually bank that gain, which is such a satisfying feeling. It really is.
It is, Sean. And look, in all fairness, we were also on record for the last couple of weeks saying that these prices, while they kept moving higher, not a bad idea to at least trim some of your position, whether it's half, whether it's 20%, whatever that might be, just to take some money off the table, but still have that exposure if these prices continue to run higher. But now we are in a time, especially on precious metals front, in terms of a correction, higher volatility, and clearly a correction at these levels. We don't know how long this is going to go, but let's say you are sitting on some cash. You did pull some profits. If you want to get back into the sector, what do you wait for to redeploy that money? Because stuff is getting cheaper, especially today. But people say, oh, I need to get in now. At a certain point, though, you do need to have a strategy of what you would deploy that money into.
Right. Well, it's much harder in like critical minerals than it is in gold and silver. And I'll explain what my targets are in like gold and silver in a minute. But let me explain the conundrum in critical minerals, which is that what's happening in critical minerals, we're having a squeeze because China has put on export controls for a bunch of its critical minerals that it's the main supplier of. And so over in China, prices are actually crashing for these things because they can't sell them overseas. So it's hard to say, well, how far is that going to pull back? When will I buy? Because it's really over here on the demand side that they just can't get any, which is why the White House is throwing money at these companies that actually develop these projects, and why these big companies are like signing deals with potential suppliers to get future supply. So on those, I told my resource trader subscribers that this was when U.S. antimony was like really pulling back on Monday, and but they had just announced that they are going to make an acquisition of Larvado Resources, which is an Australian mining company that has the eighth largest antimony deposit in the world and is going to bring that into production starting next year. And it also has a rich gold deposit as well. So that really makes U.S. Antimony a much better company. As I explained, I was already a shareholder. I just got diluted, or I will be diluted by this deal by about 25 to 30%. But rather than get mad, as I often get mad about being diluted and stuff, I'm just looking at this now and like thinking this is a whole different company. And I really want to own more of it. So as I told my subscribers, I'll be adding this week. I bought some yesterday. I bought some today. And there are other critical minerals companies that I also want to buy. And we'll see how far this pullback goes because I really want to buy a lot of them. As for gold, well, gold has a real history, right? And so we can look at these things and say, where will gold likely pull back to? I'd say that if this pullback continues, we'll see a test of like $3,800. That would not surprise me at all. So, first it has to test 4,000, right? And it's amazing how we blew through 4,000 so quickly. So a test of 4,000 really seems to be in the cards. That would not surprise me. And, we have support around 38. Well, it's actually around 38.40, 38.50. And then we have more support around 3,700. And so those numbers might be scary to anybody who like bought gold recently. But if you've been holding these positions for a while, as I have, it's just a normal part of any bull market. Silver, we thought $50 was going to be support. But actually, if you look at a chart of silver, talk about a rocket ride. It's probably going to go back and test 45, seems very likely, maybe 43, which is where it really broke out. And so those would be the places where I would look to add more silver leveraged positions. But that said, if it doesn't pull back to that, I have plenty of positions. If it does pull back to that, I won't be scared. I'll start getting greedy because that's a real opportunity to add up on stuff on the cheap because I just raised cash, as I said. So I think that, this is going to turn into an opportunity. What actually triggered this? Well, it's a couple of things. Last week, we saw the margins on gold and silver futures contracts get raised. So, that maybe have been part of what happened with like Friday sell-off. But really, it's, profit taking. People have such enormous profits, just like me, they decide to take some off the table. And then once the selling starts, it kind of snowballs. If you've been in the markets for any length of time, you've seen this kind of stuff before in different things. And none of that changes what's happening with the central banks, which is month after month, they are showing up to the window and buying more gold. And that's the major underlying driver. There could be other drivers coming along. Seems like the ETFs are starting to get in play. Of course, they always seem to do that at exactly the wrong time. But we haven't even seen retail really get involved yet. There are plenty of things that could drive gold higher. So I look at a pullback here as pretty much the opportunity it is. That's all.
Well, Sean, it's really interesting to think about the numbers you just covered. If gold was to pull back to 3,800 or 3,700, or if silver was to pull back down to $45 or $43, 6 months ago, those would have seemed like amazing prices. And if you think of the Q3 earnings are going to be based on, the Q3 earnings are going to be based on an average of around $38, $39 silver. So 45 or 43 would still be higher than Q3. And at gold at 4,000 and it going back to 3,800, 3,700, again, that's higher than the average third quarter price anyways. And we've already started the quarter off with a lot higher prices. So anyway you slice it, it still looks like Q4 is going to have a higher average price than Q3, which was higher than Q2 and Q1. So do you think that that starts to factor into people's valuations when we go through this earnings season over the next couple of weeks?
Yeah, well, actually, I'm not even waiting the next couple of weeks. We have Newmont reporting after the close on Thursday, and their outlook will be key, I think, because I know that they make conservative estimates and stuff, but if they start to show they are a profit machine at these price levels and they start to make forecasts just raise them a little bit, use $4,000 gold for God's sakes. They really might show just what these gold miners can do. And you guys and I have had these talks before about what kind of companies I like to buy. I like to buy either miners or else companies that are developing mines that just have a pathway to production. And those are the ones that can really profit off of this stuff if the news out of Newmont is actually quite good. I don't think the news could be bad, but maybe it'll be mediocre and we'll see what happens there. But if it's good, look out. That might be the next thing setting this off, because then people say, okay, well, what's the next company do? What's the next company going to do? On and on and on like that. So yeah, I'm expecting a great earnings season, and it's the forecast that will really be important.
Sean, I think you're right on that. And quite frankly, I will be shocked if we don't see more record revenue, record earnings out of these companies. But yes, after earnings are released, everybody looks at the forward guidance. And especially with these big miners, they're not growing production. So what grows their balance sheet, what grows their revenue are higher metals prices. Do us in general, precious metals investors, need to be concerned if the precious metals prices, gold and silver, lose this momentum? It's week after week that we've been talking about all-time highs. If the market does go through a prolonged correction, let's say 3 months, 6 months, where we're not talking about all-time highs, then we're not going to be seeing even higher earnings or even higher revenue numbers. Would that loss of momentum, which clearly this has been a momentum trade recently, would that cause a further pullback in the stock prices?
Well, yeah, because people get bored and stuff like that. But I do want to add one more thing that's going to widen those profit margins, which is energy prices are falling. Price of gasoline in the US is like down to $3 now on the wholesale level. I mean, could be higher where you are and stuff, but just prices are coming down, and that's going to help the operational costs of all these miners, and which which will really be good. And yeah, this could drag on for 3 months. I doubt it drags on for 6, but it could. But we're still comparing with a year ago when like things were cheaper. So I could see the case happen as you laid out, where people really get bored and like they move on to something else and all that. But on the other hand, I don't think it's likely. I think that, yeah, maybe we'll have 3 months where people get bored and they'll move on, but they'll be back sooner or later, because if gold prices stick, above, say, oh, I don't know, 3,800, then these companies are profit machines. They really are. And they don't have nearly enough attention in the market yet. Most people do not know them. I will say, I spoke at the Money Show last week, and my room was crowded, which it usually is not, because I'm always up against some big name guy. And also, when I put the QR code up at the end that brings people to the landing page for my monthly newsletter, you should have seen all the phones that came out to get that. That was kind of unusual too. So the retail investor is starting to get interested in this stuff. They are starting to wake up, but it's just the first openings of the eyelids. Most people are still asleep on this. I know that's hard for many people listening to this program to imagine, because they're really excited about gold and they have been for a while. The people listening to this program aren't most investors, and most investors are still sleepwalking through this. When they wake up, it's just going to be an incredible run.
Well, Sean, I agree. The people that listen to the show are not most investors, and we appreciate all the listeners here at the KE Report for being forward thinkers. But I want to bring up a point you just said about, hey, they'll still be, waking up and their eyelids will be coming open, even if metals prices stay anywhere close to here. I mean, honestly, Sean, we could pull back to $3,000 gold, and these producers would still be making a lot of money. We could pull back down to $35 silver, and the producers would still be making a lot of money. So even where we're at now and there's a huge delta. Do you think if metals prices just went sideways, essentially, and channeled sideways, that we would still keep seeing a catch up, because there is still a divorce between where things are valued and the margins the producers are making and the development stage projects you mentioned that are building toward construction? Their projects on paper went from billion-dollar companies to $3 to $4 billion companies, but their valuations didn't shift up enough to account for that. So do you think if we just had a sideways motion that we could still have catch up even though pricing's not going higher?
Well, it should work like that. We would have to go through disappointment first. There is some hot money in the industry. People who had $5,000 gold by the end of the year in their eyes. So that money will go, though I'm not sure exactly where it's going to go. AI, I mean, that stuff is so overblown with hot air. You wouldn't dare squeeze those stocks in public. I mean, it seems that if you want to look for value, you either look in like mining or else energy. We don't know when the next upcycle in energy will come. Many people say it'll be next year, but then we heard that last year too, so I'm not really sure. But definitely we're having it in minerals and metals right now. And so I expect it to keep generating excitement, even if there is a pullback where we'll have to deal with the initial disappointment. But once we get beyond that, as you said, these things look cheap. And a lot of people doing those calculations will figure out just how cheap these things are. And so that's where the opportunity lies.
So, Sean, I'm curious then. We talked to you about a lot of different sectors, and right now, recently, last few months, even this whole year, precious metals and then even critical mineral stocks recently were complete outperformers. So they were at the top of everyone's performance chart in terms of how they were doing this year, even when you compare it to tech and AI, really everything. Are you rotating some of your gains then into other sectors, or are you simply holding that cash to reinvest back into these outperforming sectors?
Right. Well, in Resource Trader, I'm just going to play the hot resources. And, I would love for like solar to pick up again, but I'm not going to actually count on it. So basically, we took gains. We'll wait for the next bottom, then we'll redeploy in there. Supercycle Investor, we're playing a lot of different things in there, one of which is what I call next gen defense tech, and I've talked to you guys about that before. And I think we took 125% gains on one of those stocks recently. And they're also selling off today. But, there are more stocks I'd like to own in there. So maybe I'll take some of those gold gains that I got and I'll put some of that money into next gen defense stocks. That's entirely possible. Then again, maybe I'll just wait for the next opportunities in gold and silver. There are plenty of them. And these stocks still look cheap to me. Now, some of the run-ups we saw recently were unsustainable. I was just writing to my Resource Trader subscribers last week, and we'd owned one stock for less than a month, and it was up 100%. That's a sign that, maybe things are really getting ahead of themselves. And I have to tell you, one thing I knew that we might be in some trouble is I turned on Bloomberg this morning, and they were having a serious conversation about critical minerals and rare earths, and I said, "Oh boy, that's trouble." When the regular people on TV start talking about it, oh my God, we've finally woken up some people there and all that stuff. So we were due for a pullback. I'm just not that worried about it. And so, yeah, if we have a pullback, I'll probably be buying, if not the same stocks, more of the same kind of stocks, because I really think they have a lot further to run.
Well, Sean, just piggybacking on that issue, let's just focus it on rare earths just as we wrap up here. We've been talking about rare earths with you for a while, and we've been talking about it on the show for a while, but you're right. Over the last couple of months, but especially over the last couple of weeks, it seems like people are coming out of the woodwork to get into rare earth stocks, and you could see that in the price action. These things went vertical. But the point you just made about maybe you wait for some of the pullback to get into stocks that you missed on the run up, and now's your chance to get back into it, or you refortify the positions you like by adding some tranches and getting a better cost basis at lower prices. When you're doing portfolio management, are you more tempted to fortify the ones you already love the ones you're with, or are you more tempted to initiate new positions?
Well, yeah, have to remember that I write for retail subscribers, and for them, variety is the spice of life. They always want new names. So I probably won't be adding to the existing positions we have, though, as I told my Resource Trader subscribers this week, I like this stock on a pullback. I already own it. I am going to buy it just to let them know what I'm doing. But they probably like some new names. There are new names out there. So I'm probably going to recommend that. In my own portfolio, I mean, I can only keep track of so many stocks, right? So I'm probably going to be adding to the existing names just because it makes it easier for me.
All right. Well, I think we'll wrap it up there for today, but some good thoughts on how you're managing their portfolio and talking to subscribers about different areas of the market, whether that's the precious metals, whether that's the critical minerals, whether that's next gen defense stocks, or any other areas that you see trends developing. There's always a rotation trade. There's always the ability to buy if you raised cash. And it's been a smart idea to have talked to you in the past about when you trimmed back some of your winners or pulled profits. So that gives you the capital to redeploy. Great thoughts today from Sean Brodrick. And for those of you listening in, if you want to follow along with Sean's work, we'll put a link down below to Weiss Ratings and specifically to Resource Trader since that's more focused on commodity stocks. But check out his whole suite of offerings. And Sean, as always, looking forward to our next conversation.
It's always great talking to you guys. Thank you.